In this episode, we talk to Austin Silver from ASFX. Austin is a trader who is absolutely crushing it out here in the Forex market. In this 20 questions interview, he shares so many great nuggets of wisdom that I think will help up and coming traders. This is a special episode because after the interview, he pulls back the curtain and shows his screen to be able to reveal his edge to the audience. There is so much knowledge and wisdom that is shared in this particular episode, and I'm excited to share it with you. Let's dive right in. Hey, Austin, what's up, brother? Good to see you.
Good to see you, Marcus.
Hey, you ready to jump into 20 questions?
I'm ready to do it. I'm excited to be here.
Let's do this. Okay, first question. When did you start trading?
So I started trading late 2015 going into 2016. I was still in college. I was living in New Jersey at the time. That's where I was going to school. I was living in an apartment with a buddy of mine, just sharing a 2-bedroom. That was when I was actually at the same time when I discovered trading. I was in an internship working for Northwestern Mutual, the life insurance and investment company. That's like where I got my in finance. And once I got into there, I found day trading. I started studying for my Series 7, which kind of pushed me in that direction. And then I caught the day trading bug and I kind of drifted away from that industry and really fell in love with day trading. And that's where I started to trade.
Excellent. So seeing as you started way back in like 2015-ish or so, what would you say frustrated you most about learning to trade in the beginning?
The hardest part was that I was unable to find mentorship. I couldn't find someone in the Forex space specifically that could prove to me that they had been profitable in the market, that could prove and teach me a system that they were following. There was no guidance. And I think that's why I struggled for as long as I did, just because now you can look around with the internet where it is. 5 years is a lot of time. You know, a lot of people have come into the space, come and gone for some people, but there's a lot of guys that are sharing their experience now where you can go online and I think find a shorter learning curve than I had to find. Lack of mentorship was the most frustrating part.
Oh man. Yeah, that's very true. So then what would you say was your process for finally getting consistent as a trader?
So I started to study successful traders in other markets. I opened up my mind to the idea that I could just learn from others and apply what they did in stocks or in options or in futures or in commodities. I could apply that psychology or that process into what I was doing with Forex, which kind of pushed me into this idea of like finding a system. I learned about the idea of a trading system, having rules and checklists and ways of grading your trades and all these different things. So that was where I started to like identify this idea of what a trading process is. And then it was just about taking the idea from these other guys and implementing it into the Forex market. And that's kind of what I did. So I started to back test patterns that I saw, started to build questions around trade entry ideas, see how management would work for those ideas. And that's where I started to construct my first system.
Got it. That actually makes a lot of sense. So you talk about trading systems, which is important. So then for you, how would you, let's say, define your trading edge?
So my edge comes from price action patterns that I can confirm with multiple indicators. And within that, I'm able to identify risk reward, identify probabilities, and then decide if I want to take the trigger signal that could or could not present. So my edge is in that my systems are very precise. Like I have about 10 questions that I ask myself to look when I'm looking at a chart to qualify or disqualify the setup. So that's where my edge comes from, is in the precision. And I think that that's kind of something if you asked me 2 years ago, before ASFX was as big as it is now, I wouldn't have said it that way. I've said it that way now because a lot of people have come through our community and said it to me that way. So I'm like, oh, I really love that. They're saying, I've never seen any system this precise, this detailed, where it's so clear cut and dry, which I think helps make it easy to teach too, you know?
Absolutely. And when I do these interviews, most traders will say that their edge really does come in the mechanical side of the systems that they have honed over the years, which has helped them to be a better trader and more consistent. And that's great. Another question that I have for you is, so as you've been doing this for as long as you have, and you have been successful at it, what personal qualities within you? So like what parts of your personality do you feel have helped you to be better suited as a successful trader?
Sure. Patience is definitely a virtue that I have instilled in myself from I think just like the way I was born. Like you can go back in my life, my mom will tell you I was always super patient as a kid, even building Legos. Like if I see a bigger vision for something and I am passionate about that, I'm going to keep working on it. I'm going to follow the rules that we need to follow, the instructions we need to follow, whatever it is, in order to accomplish that bigger vision. So I'm mission oriented. Like those are my that's another strong personal quality that I have. I think that's a big thing for me. Like that helped me get better as a trader overall, was learning more about myself. I've done a lot of like personality tests. My girlfriend, Riley, who's my business partner, she's big on the psychological aspect of just business and my trading business in general. So I think a lot of it has made me go deeper to learn more about myself, learn like even language specifically to give myself context to think about. That's helped me, like that mission oriented person. I'm very focused, like I said. So I have certain qualities, I think, like that, but patience is always the first one that comes to mind when I think like what, along with my technical system, what gives me an edge? It's probably that I'm willing to be patient and willing to not, now at this point in my career, I'm not greedy and I'm very humble. I'm like, if I can get 2R and the move goes 6R, that's okay. I'll take my 2R. I'm happy about it. I'm not the guy that's like, oh man, I didn't catch the whole move. I suck at That's not how I choose to, the perspective that same thing could happen. Someone could take that negative perspective, but I've just taken the other path at this point.
Yeah, that ultimately makes a lot of sense. So those are the questions about your background. If we can switch gears a little bit, I want to kind of hone in a little bit on your trading method. Now, we're going to get into a lot more of that when we actually jump over to the live trading view. But I did kind of want to jump and get some of those questions out now. So for you, what would you say is your favorite? Because I know that you trade Forex. So do you have a favorite Forex pair or a few pairs that you like to trade the most, and why?
So yeah, great question. I love right now trading Euro pairs and GBP pairs. And like you said, we'll go over this when we get into the charts, but specifically those pairs, because every 3 years there's an international, I think it's the IBS, International Banks. I don't know exactly what it's called. This organization basically goes around to the central banks around the world and takes their data about what currency pairs are being exchanged the most. And they do studies and research on this data. And you can look at these. They're public. The website is bis.org, I think. You can go there and see 2019, 2016. You can see the surveys. So what I did was I looked at these PDFs. They're very easy. Like they're just small PDFs. And they said which currency pairs are being traded the most, which ones had the most volume. And that's where I choose to look for my trades. Just because with Forex, I'm not sure if it does it the same way in other markets because I'm not super proficient in other markets. But I know in Forex, when you have low volume, it can actually increase volatility. You'll get a lot of pins. Price action will be choppier, and that can just stop you out before the trade actually moves in the direction that you knew. So I've tried to avoid those kind of pairs. Some people, like a currency pair that comes to mind like that would be like US dollar, Turkish lira. There's just not a lot of volume in that, and it's very, very volatile. Or US dollar, South African rand, ZAR. Another one that's just not that common. It's not traded by the big banks as much as Euro USD or GBP USD. So I'd rather be in those.
No, that makes a lot of sense. Go to where the volume is for sure.
Follow the money.
You're comfortable.
Come on, Marcus.
Absolutely. That's the easiest way to do it. Okay. So then knowing what pairs you like to trade, would you say that with your system, there is a quote unquote ideal market environment? And then if there is, what are some of your ways in which you are able to identify when that environment exists?
I would say an ideal market environment for me personally. So like with my systems, with the way that I trade, I have 3 entry and exit strategies that have rules and checklists that are each individual to themselves. 2 of those, the A1 and the D1, that's the names of them. They are in trend trades, meaning I'm looking to identify, is it moving long, is it moving short, or is it chopping sideways? And if it's moving up or down, long or short, I'm going to look to possibly take advantage of that trend and join in and follow the ride as long as it wants to take me. And then I'll look for the next trade. The other trade that I use sometimes is called a D2, and that's more of a reversal trade. So for my ideal market, first I have to know, am I a contrarian or am I a trend follower? And in my belief system, I think a lot of traders are disconnected from their underlying belief systems, and that's what causes a lot of issues. So I've aligned with my own beliefs in this sense where I don't trade the D2 system as much, as often as I do the A1 and the D1, specifically because I'm not a contrarian. I don't do well at calling tops, calling bottoms. I'm much better at saying, where's the trend? How do I find risk reward here? Let's jump in the train here and see if we can get something. You know what I mean? Because more times than not, I'm going to be able to. So my ideal market for me personally, not just for ASFX, some guys come in and they crush it with the D2 and that's it. But mine is a trending market where higher timeframes can give me a confirmation in that bias. I can go to a lower time frame, find risk reward within that same direction. So when the bias is very clear, that to me is an ideal market condition. And another context to that could be like some guys will trade ranges. like for example, the Asian range, which we'll talk about in the charts too. Like some of people will try to trade off the Asia high, Asia low. That's just not my style. It's not that would not be ideal market conditions for me. You know what I'm saying?
Mm-hmm. Mm-hmm. Sure. Okay. So then with your A1 and your D1 trades, which seems like your bread and butter, the ones you're
Yeah.
most confident with,
Yep.
how do you go about calculating your lot size or your position size when you're entering into a trade?
Great question. So I used to think that every trade had to get the same percentage risk of my overall account. So what I would do is I would just look at the trade. I'd use a lot size calculator because every currency pair will calculate each pip to dollar conversion slightly off. Euro USD, 1 pip is $1, but every other currency pair like GJ, it's a little bit different. So using a lot size, like a position size calculator really helps. But what I used to think was that every trade that I see, 2%, 1%, whatever the percentage would be, it doesn't matter. But after a while of not finding the success that I wanted, I realized that something needed to change. So again, just more study of other successful traders. And I realized I could be grading these trades, some of them being high probability, we call them A setups, versus lower probability C setups. So I determine the position size based on the grade of the trade. And I get the grade of the trade by asking myself questions, the same questions on a checklist every day that I show up. So if I can grade the trade, my system, my trading plan tells me how much I should be putting on that trade. No matter what I feel, even if I think it's the best setup of the year, I'm not going to break my plan, hopefully. And I'm going to follow the rules that are written there and put that. If it's a B setup, it's going to get 1% risk. If it's an A setup, maybe it gets 2%. But I tell everybody that I work with, percentages, those like if your A setups are 2%, B setups 1%, C setups 0.5%, just as an example, that can fluctuate. Some people want to be riskier than me. Some people want to be less risky than me. I call that your risk profile. What do you give the percentage to the grade? But for everybody listening, if you're not already doing that, that would be my biggest piece of advice I think that we could ever share is grade your trades. Figure out a way within your system to say, this is a great one. And this is just one where I can read risk reward and I can see where this is going, but it could be a lot better. What could be better is the 3 best words that I think any trader can ask before they click the button. What could be better here?
Absolutely. That is very true. Okay. So looking at, you've got your A1s, you got your D1s, you know which ones make sense. You know how to calculate your position size. And is there any room in your system, in your strategy for trailing? And if you do trail, how do you determine when it's time to stay in to capture a big move?
That's a great question. So the way that I manage the trades, again, goes back to the grade. So let's just use the same example of a B setup. So it's not perfect, but it's pretty good. Like it's not that bad. Maybe one thing could be better. Maybe like it's overbought and that's the only negative on the chart that I see, but I want to buy it today still. So that would be something like a B setup. Let's say we take the trade. We're just for easy numbers, 10 pip, 10 point stop, whatever you like to call it. We use pips in Forex, not dollars. So you got this 10 pip stop. Let's say we're looking for it to go 2R. So that'd be 20 pips. As that B setup moves up 10 pips in profit, we're now at 1R, 1-to-1. Because it's a B setup, I'm not going to do anything at 1R. And this is just my way of managing. With these B setups, I'm going to let them run a little bit higher, maybe 1.5R, closer to 2R, closer to the 20 pips. And that's when I'm going to look to take some profit and move my stop loss up as that trade moves higher. And I'm going to keep watching the trade, judging it on candle closes, not mid-candle movement, because I think that'll get you stopped out, get you pulling out of a trade while it's just pinning an EMA, and you don't need to be doing that. Yeah. So I just manage my trade candle by candle. We call it CXC, candle by candle, meaning as we move up to our multiples, I'm going to take more profit and continue to move my stop up. Ideally, in a really great scenario, I'm piecing my way out as that moves up, and I'm getting stopped in profit with a very small piece of the trade left. In the same sense, I'm working on right now, one of the things that I'm doing this year to, I think, try to take my trading to the next level is regressive risk. Is I'm trying to actually get out of the trades if they're not working for me in pieces as well, so I don't get stopped at full stop with the full size. So in the same sense, I'm not trying to predict where the market is going. I'm only reacting in both of those situations. Because if you were to, I think a lot of the time, set a 2R take profit in that 20 pip trade where we're risking 10 to go get 20, you might get smashed at that full 20 pip take profit. But what if it goes 80 by Friday and you could have been in the trade carefree, stop loss locked, not even managing it and just watching it move and moving your stop once or twice a day? I like to be in those moves rather than just go 2-to-1, take my 20 and move on. So it's a mixture. You know what I mean? Everybody kind of finds their own edge, back to what you said about edge within the systems that I trade. But That's how I've found success, is really just being able to take advantage of the move as it moves and wait for the market to tell me it's done.
Yeah. And that's an important point to put forth. And I think it's going to lead great into kind of my next question or my next topic that I want to speak on, which is profit goals. Now, I have an idea, I think, of how you're ultimately going to answer this question, but I want to let you do it yourself. So, do you have like a daily, a weekly, or a monthly goal? Like, what is your process for determining, most importantly, when it's time for you to stop trading? Because there are so many traders, especially ones that are up and coming, that can get a little profit, but they don't understand ultimately when it's time to stop. And so they'll get these profits and they'll lose the money. So what is your approach to your goal setting in terms of your individual profits as a trader?
Great question. So the first thing that I did, this was one of the early pieces that I built into my rules, was and this is where you might think I am a little contrarian, but I'm not. I'm just cynical. I'm not contrarian. And I'm skeptical of a lot of things. So when you hear Forex is a 24-hour market, after you trade it for a little while, after at least I did, I started to think like, maybe there's a reason they advertise this as a 24-hour market. Like they want me to think I can trade all the time at all hours, at every minute of the day, except the weekends. So I started to just think on that a little bit more. And again, we know a lot of traders, we'll say 90% of people who get into trading lose their money. So I don't want to do what everybody else is doing. And I don't want to get sucked into like what's on the headlines of brokers' websites and stuff like that. So back to the survey, like doing that research, when I found that BIS survey, I was like, we could also use this to determine, I'm sure, when most volume is done on an hourly basis. And what we found is that the London session into the New York session is when you're going to see the most action. And logically, that makes sense because the most traders are trading. Most banks are open in the world. We're talking about the entire world, not just the United States. So that kind of made me build trading hours. I couldn't commit to trading Forex 24 hours a day, 5 days a week. I need to have a minute where I shut my mind off and I think about growing my other investments, my other businesses, my time with my girlfriend, my time with just other things. You got to shut off. So that's why I kind of boxed myself into saying, let's find the most volume, the most volatility within what hours is that happening. That's where I want to be. And normally we see that between about 1 a.m., 2 a.m. New York time at the end of the Asian session as we move into London. And then from that London changeover into New York, it goes till about 10, 11 o'clock New York time. So 1 a.m. till about 11 a.m. New York time is the most volume. I'm actually only trading 5 a.m. normally, maybe 5:30, depending on when I wake up, 5 a.m. till about 10 in the morning. And that's it. So those are my trading hours. Now, in terms of goals, to your full question, I don't set dollar goals at all. I never set like, here's how much money I want to make this week. It's a death trap. If you're listening to this far in, I would assume the people that have made it like this far into our conversation, Marcus, are probably already past that. And they're like understanding that percentages are more important than dollars. At least I hope so. You know what I mean? We got to, hopefully we changed everybody and get them to that point. But that was a big thing for me. I made a video years ago on my YouTube channel. This is like 2018, called the money switch. So now everyone in my group, everyone that works with me, everybody listening now is going to visualize a switch, because society continues to reinforce this idea to you and me is as consumers in a consumeristic America that money is the most important thing. But in reality, when we come to trading, percentages matter more. That's what we need to be focused on. So there's like a little switch on the left side of my brain, and I make sure I turn off the money switch and turn on the percent switch every day when I come to the desk. So I don't set hard goals either, meaning I need to make 5% today or I'm not stopping. And I don't set hard percentage or dollar goals, just so I made that clear. So what I do instead is I focus really, really intently on my month P&L, and I focus intently on trading the best trades that I can find during my trading session. If there's moves after my hours or before my hours, I can't do anything about that. I can mark them up and study them. And maybe in the future, I adjust my hours because I'm missing all of these moves, but that hasn't happened yet. So I really don't believe in, I don't want to say I don't believe in goal setting, because of course I believe in goal setting and setting milestones and setting parameters and bars to reach. But I don't think you should ever come into trading with a goal of like, I need to make 2% this week. Because if you do that, no matter what the number is, you're going to chase that. You're going to take trades that are probably lower probability trades. And that can actually dig you way deeper than you ever thought possible. So I think that actually hurts people as they come in and they're hey man, I just want to make $1,500 a week. $1,500 a week. That's all I need. Well, bro, when you get to Thursday and haven't made $500 yet, you're going to come in Thursday and Friday with haymakers and you're swinging at the market, probably digging yourself deeper. At least that's what I've seen. That was my experience. So I had to kind of go through that myself, that transformation to understand
it. That makes so much sense. And again,
is that what you thought I was going to say?
Yes, that you weren't sticking to a daily goal or weekly goal.
Yeah, no,
maybe
you can't, because what if the market doesn't give that to you? Like, what if it's like FOMC day and the market is literally sideways, especially in currency pairs, when the Fed's going to speak or there's a bank interest rate announcement coming? Sometimes the market is choppy everywhere in major pairs. Why would you force a trade in that situation? You know what I'm saying? The market's saying, go enjoy the day. Like, especially if you're lucky enough, like I am, where I can actually take a day off and not have to do anything, and like my bills still get paid, food is still on the table. That's what we get into trading for. So in days like that, it's like, you got to take them. But it's, we've talked about this offline. Like, people get caught up in it. They got to trade a lot, trade all the time, be always at the phone, always at the desk, phone, ATM. And it's like, this is not the direction that you should be going with your mindset here if you're trying to build a trading career. You know what I mean?
Agreed, 100%. So just a quick story. I've got a coaching client who was one of those types of individuals that needed to hit a certain percentage per week. And I would tell you that routinely he would get into this pattern where he would be about $500, maybe $600 away from making his goal, which was multiple thousands of dollars. So he was pretty close already on Thursday night. And routinely every Friday, he would go, I need to get my last little 600, 800, dude, whatever.
Friday is the worst,
and
man.
Lose it.
Of course.
And lose so much money. And he just couldn't understand. And I'm like, listen, if you are having issues where you're making $5,000 Monday through Thursday and then you lose 4,800 of it on Friday, stop trading on Friday. Like, it's just really that simple. Like, that's all you
And in his situation, stop setting a goal. Be grateful you made $4,800 sitting at home clicking buttons. Like, that's to me where it comes back to. It's like, for what? Why would you? Yeah, we don't need to go off on that, but great point. Great point.
Yeah. So, and that is great because it begins to have a segue into trading psychology, which is the next set of questions that I want to bring forward to you. So my first question for you on the psychology side is, for you, how do you personally define success for yourself as a trader?
Freedom. As long as, like I just said, like, as long as no one's telling me or my family where to go, where to be, and how we're going to make money, I'm free. And that's all I've ever wanted. I think it's because, short little story, like when I was younger, I've seen my parents are both still alive and healthy right now, but they have gone through some health issues, and I've seen how quickly life can just change, man. And you can't experience the things that you once could. So to me, I'm young, but I'm wise. Experiences are everything. So I'm trying to have me and my girlfriend and my family be safe, be free to continue to experience life, because at the end of the day, we all end up in the box. You know what I'm saying? So it's all about just living. So for me, success in trading and in business, it's always going to come back to, how much freedom do I have? Who's telling me where to be? Who's controlling my time? Because time is the most valuable currency in no argument. You know what I mean? In no argument.
It's the only thing you can't get back. Very true.
Exactly.
Okay. So on another level here, so with trading, we know that inevitably there's going to be ebbs and flows, ups and downs, wins and losses. Sure. But there are times when you trade in which you are losing more than you normally would. So for you, what are some steps that you take when you need to handle a specific losing streak?
Sure. If I lose 4 trades in a row, I cut my size in half for the next trading week. So that's a big thing that I just started doing in the last 2 years. It's made a big difference because I can quickly reassess, see, is it me? Am I off, or is the market just not working for me? And then I can, no matter what the answer is to either of those, I'm coming back with smaller size. So I'm not digging myself even deeper, even faster. You know what I'm saying? Yeah. So instantly, like, for example, if I'm trading 1% risk on B setups and I end up losing 4 in a row, I'm going to cut that in half for the next week, and maybe even the next 2 weeks, because that next week I might not get any trades. And you have to be patient and deal with those periods of like that grueling, it's not fatigue, but it's like you have to have mental fortitude to be able to show up and still stay strong, even when you do experience those periods of drawdown. And another big thing that's helped me is not just sizing down, but it's sharing my trades, getting feedback from other traders, especially other really successful traders, people that I think are smarter than me. I look to them to say, hey, can you just review my last 4 trades? I'm going to send you my markups, send you my journal, give you all of my thoughts. Can you just give me feedback on this? Like, let me know what you think. That has helped me so much, because even as the person who created ASFX. I've never said I'm the guru, the best trader, because I
Mm.
know that I'm not. I've created ASFX to just build a community of people that can surpass me. That's what a good coach wants, right? So I look to these people to give me feedback, and they'll tell me things sometimes that I'm just overlooking, small little things sometimes. Like, we're all human. To not
Hmm.
ask for feedback is like saying you're Terminator. It's like, no, bro. Like, you need real people to criticize your ideas sometimes to get you back on track. And like I said, I really do pride myself on being humble enough to just take that, take it when I'm wrong, take it when I'm not doing something right, because I can just get better. Like, I know I'll come back, and that's why I'm confident in that, because I know I still have the energy to come back. I still have got the capital to come back. I'm not digging myself out like that. You know what I'm saying? So I
Yep.
know that no matter what criticism I have to take, no matter what I have to do to confront whatever is causing those issues, I know I
Yep.
can overcome it. I feel very confident in that.
That's good. So I heard some great buzzwords in there. I heard
Yeah.
humbleness. I heard mental fortitude. I
Yeah.
heard, having the strength. So what is it that you would say that you do to deal
Mhm.
with the inevitable, frustration, anxiety, self-doubt, and other like negative emotions that come up as a result of just being a trader in general?
It's a good question. Again, I just want to be honest. I haven't had a lot of that lately in the last couple of years, so I'm very grateful. But I can definitely think back to when I first started trading, and a lot of, especially when I was losing consistently, my
Mm-hmm.
parents, especially, because like my dad was always like wanting to know what was going on while I was going from like in college to
Mm.
dropping out of college to just getting this job in New York and like doing all these things that I was doing. He wanted to be in the loop. I had to at some points block out the negativity, whether it was coming from my parents, my friends, whoever it was. And what I did, this was a big thing, was I would supplement it, not just block it out and then kind of be a loner and just be off of my own in my own head.
Yeah.
I would force myself with AirPods to listen to audiobooks from other traders, to listen to Gary V to get motivated, to listen to Grant Cardone to just get thinking bigger, 10x, like to get my mind on the level, the playing field that I knew it had to be if I was going to be a successful trader. Because like I said, such a small percentage of people actually become and builds really serious trading businesses. It's a very small percentage. So of course people are going to talk down to that. Gary Vee will tell you that he helped me so much. I don't even know him, but I know I've watched him since
Right.
2014, and he helped me through those times where people were being negative. People were talking down to my ideas. ASFX is like, not that that was the name, but you're not going to be able to build a business around this, get a regular job kind of thing. You know what I mean? So
Mm-hmm.
I think it sucks. You got to block it out. Whoever it is, family, girlfriend, boyfriend, it literally, I've seen it pull boyfriend and girlfriend apart. But it's
Yeah.
better for the person, because if you have an anchor in your life, your ship ain't going to sail. That's it. You need clean white sails, and that's it. And you need people that support you.
Absolutely. Especially in a profession like trading, where
Yeah.
it's so interesting how people they understand the upside of it, but there's times when it's really hard for you to take it quote unquote serious. You know what I mean? Like thinking of
Sure.
it as either a serious profession or even
Of
how
course.
much how much focus is required when you're actually
Right.
doing it. To think that,
Right.
oh, all you're doing is looking at charts all day. I can come and interrupt you and ask you as many questions as I want and bait and pull you out of those moments, not
Right.
realizing that it may take me a while to get back into that state that I need
Get
to be.
back
So
into it.
just
Yeah. Yeah. Yeah.
yeah, so
Absolutely.
absolutely just having someone who understands that and can and kind of respect you in that way and respect your process to know that, these things are important. Even a small question of like what would you like for dinner right now is going to pull me away from something that I may be really focused on. So that's
But
incredibly,
at the same
incredibly
time,
important.
it's good to have that balance too. Like for me, you got me thinking, I'm like, my Riley, my partner, like she has made
Mm-hmm.
she's a big difference in dealing with those down periods too. She's a good sounding board for me to talk to. And also it helps. She's very like psychological. Like she was going to go to school for
Got it.
psychology. So she has a lot of
Yeah.
training there. So she'll ask me questions, get me thinking things. She's not even a trader, and she's just going to pick me apart because she knows
Mm.
me. And that can actually help me grow in those periods. So
Got it. Got it. Yeah, that's really good stuff. Okay, so
yeah.
then I'm not sure how much of this you ultimately deal with because it sounds like you're a pretty disciplined guy with the work that you're doing now. So this may be a question for those who you coach and you mentor. But like,
Sure.
what is your process for preventing revenge trading or possibly even over trading in certain situations?
It's a great question. I still will take trades sometimes. I'll look at myself and be like, did you really need to jump back in on that one? Win
Mm.
or lose, I still will question re-entry. So don't think that I'm impervious to this. I still will. It'll happen, just not as often, like you said, for sure. But what I think has made the difference is backtesting my system has helped me become more confident than in myself and in the system to use it in the market than more fearful. If confidence and fear were like this, you know what I'm saying?
Mhm.
So because I have that extra piece of confidence from the back testing, instead of just jumping back into a trade, I really have reinforced this idea of make sure I'm waiting for a good entry signal. So it's hard because like when I first started trading, I didn't even know what a trading plan looked like. I didn't even know what a trading system looked like. I didn't know any of that stuff. So once I started to piece that together, it helped me avoid over trading. It helped me avoid revenge trading because I said, well, wait a minute, this isn't fitting that precise entry signal that we need. Why would I just jump back in right now? This is not on edge. This is way off edge. And now we're ruining the trading business. We're ruining all the statistics. We're ruining everything because we're off the edge. Once all those wheels clicked, I think I definitely was able to get a handle on that issue. But it's a lot of pieces. So if you're struggling now and you're listening to this and you catch yourself over trading, step one is admitting it, right? And saying, okay, someone hold me accountable to this. I need to stop, right? And then I think a big piece of it can just be, if you add more rules to your trading system that you have to ask yourself, add your questions before you take a trade. If you add more detail and you follow it, then you're going to prevent over trading. But the issue is you can have all those rules. I can give you the ASFX systems and I can teach it to you. That does not mean that the person is not going to overtrade. I might not even be in a trade. They might be 4 trades deep. And we're looking at the same chart on the same day. Yeah. So it's very much a psychological understanding and acceptance that there's no need to rush your trades, no need to rush your results. It's really just an acceptance of where am I right now? Be humble, be grateful to even be in the market, to know what the market is, to have the ability to be here, and then give yourself room and space to make errors as you grow, you know?
Yep. Speaking of errors, here's a good question for you. Yeah. You, Austin, with all of your discipline and wisdom that you have provided today, my question for you is, what is still that big mistake that you still have trouble avoiding when you're trading?
Every week, I just made a video about this on my YouTube channel. Every week, Thursday or Friday, if I haven't traded yet, I get this thing creeping up on me. It's like, bro, you've had a couple of reads. They worked in your favor. The timing wasn't right. You'll find one this morning. Just take the click. Just click the button. And it's that trait that I call it fatigue. It's catching up on me. I'm a little mentally, you would say you're like a little off, a little tired that week at the end of the week because you've been up, you're in routine, you're crushing it, gym, this. But at the end of the week, it comes creeping up on you. So what I've done is I will literally pull myself off the desk. I will say, Riley, let's go for a walk. I'm going to the gym. I'm going to do this. I'm going to the club. I'm out. You know what I'm saying? I will literally remove myself because if I don't, I will probably lose money. That's what's normally happened. So I don't want to do that anymore. And the thing about it is I used to work with a company in New York City and I'd have to be at my desk, live streaming my trading session, sharing my ideas, sharing my trades, doing Twitter, and that after I left that job and started ASFX, I had to break conditioning. I had to remind myself, bro, there's no one that you need to tell your ideas to. There's no one group chat. I have a group chat, of course, for all of our members, but there's none of that matters. That's in our programs. I never sell like communicate with Austin all the time because I want people to be self-sufficient. I built my video courses because I want people to be able to trade on their own like I can. That's it. I don't want people to have a crutch. So once I was able to disconnect and realize like I don't have to answer group chats, I don't have to tweet, Instagram, nothing, just trade well. And I realized I could be okay to just leave. It helped so much because I'm like, forget the desk, forget the trading. I already did my analysis and I know I don't like what I see. I'm done. I'm out of here. Not letting that fatigue come in and make me take a loss on a Friday when I was patient all week. That is the worst because then you're holding that over the weekend and it's hard to shake sometimes.
Absolutely. Yeah, that Friday blues is the worst, man.
The Friday blues.
True. Yes, indeed. Okay. So Austin, I appreciate the time you've taken so far. I just got a few more questions for you before we jump into the live trading room. So let's jump into these final questions because I'm excited to actually get you on the chart. So my first question for you right now is, what would you say is the best trade you've ever made?
So I remember this was October of 2019 because I was on vacation in Virginia with Riley for her birthday. We were staying out in the woods at this tiny house. It was sick because we were working from there, but we were staying there. It's a business trip, right? So it was for her birthday. We're doing our thing. And I was not actively trading in the group chats or anything. I was just doing my own thing. And I took a trade the first day we got there on GBP USD. And it ended up being about a 460, 70 pip winner for me that I was able to hold all the way through from Monday or Tuesday, whenever we got there, into Thursday. It was a 2 or 3 day trade. And then ended up being my biggest pip winner, dollar winner that I had. My, other thing that you make me think of is when I was first trading. I remember my first day where I crossed over $1,500 in profit. And I remember calling my dad. I don't remember when it was. And I remember calling my dad and I only say this because I look back on this day now and like $1,500, no, as much as it is a lot of money, it really isn't.
Yeah.
But I wasn't focused on the right things then. But I was so excited that I had made $1,500. I called my dad. I was fired up. I was like, I told you, I knew what I was doing. I'm the man. You know what I'm saying? So
Yeah.
those are the 2 days that always stand out to me as like my biggest winners, because that was a turning point for me. That $1,500, like
Sure.
that was a big day. You know what I mean?
Absolutely. Yeah. Okay. So then on the flip side of that, we talked
Sure.
about those good days. Can
Yeah.
you think back to what you would consider to be the worst trade you've ever made?
I can't think of like when you say that, I want to give you like a trade where I kept moving my stop loss and it just was a bleeding
Sure.
loser, but that's never happened because I haven't. I mean, I've moved my stop before, of course, but I've never let it blow out my whole account. I've learned that you can't move your stop, and I've gotten better. But so I could think of, when you say this, like the worst trade I ever made was, I think, last year, 2020. I got into Bitcoin with a nice size position at 3,000, almost $4,000, and I closed it all at 12,000. And that was a bad trade. I have to admit that was a bad trade. No foresight, no future thought. I was like 4,000 ish to 12,000. This is a great trade. I'm like, this is sick. Get me out of here. 3R, give me that money. No, that was a bad one. That was my most recent. If you had to call it a miss, that's what it would be.
Gotcha. Okay. So Austin,
yeah,
we're having this conversation right now. You are you. Yeah. You've been successful as a trader. You've been doing this since 2015, right?
Yeah.
But if you had the opportunity to go back with all you know now and talk to Austin in 2015 when he's getting started, what is that number one piece of advice that you would give him?
This is a good question. It's crazy you asked me this, because I'm releasing this week a free PDF on our website and everything, where I literally, our marketing team said to me, go sit down for a day and just write what you would tell yourself if you could go back to when you first heard the word Forex trading. And that's what I did. So I'm not going to give away too much of the information. I want everybody to go check out the PDF if you don't mind. But I would say to my younger self, find a trading system, just one, that aligns with your beliefs, that makes sense to you logically. You can't fight what your gut is telling you, and prove it to yourself. Backtest it, prove it to yourself that you can actually trade it. And just find one of those. Don't try to follow everybody on social media. Ignore a lot of it, to be honest, and find one. Because one system can lead into two, can lead into three. My three come from the A1. The D1 and the D2 come based off the knowledge of the A1. You know what I'm saying? So it can build on itself. You just need to give it the time to do that. I rushed around a lot when I got started. I don't know. I'm sure this is relatable to maybe you or a lot of people listening. I was all over the place, man. This strategy, this don't work. This don't work. No, bro. I was not being proper. I wasn't working. The strategies are easy to find, man. There's strategies everywhere. You know, I really do believe that there's a lot of winning strategies, but it's finding the right set of beliefs, aligning with that strategy, proving to yourself that you can be confident in it, and then practicing it over the long term. I didn't have all that connected when I got started in trading. You know what I mean? That whole picture. So that's what I would tell myself.
Absolutely. Absolutely. Okay. So then one more question before we jump into the charts.
Sure.
Let's say it's the 1 year anniversary. We're going to do a little time tripping. It's the 1 year anniversary of our time together, right? So it's been a year. We're doing this podcast episode again.
Yep.
What would you say would have to happen over that next year for you to be happy with the results?
The results of my trading, you mean?
Mm-hmm.
I would say, well, number one, don't lose money. So that would be the first thing. As long as I'm making more money than I'm making today when we're talking, then I think it's a good thing. And I think that's probably the best answer I could give you, because I am happy. I'm happy with my results so far through 2021. I'm happy with my results of 2020. I feel like no expectation of my future has actually done a lot for me, man. It's crazy to say that, but not expecting me to be anywhere and just living every day with a lot of energy, a lot of passion, focus, and a little bit of thought on the future has done more for me than planning or future seeing has ever done. Because you're always going to be wrong. You know what I'm saying? If you would have told me I would have made as much money in 2020 that I did in 2019, I wouldn't have believed you. I'd been like, it's going to take me till 2023 to get there. So setting small expectations or none at all, and just letting go and letting, the universe kind of guide me. Sounds a little rah-rah with my crystal on my neck, but it does actually help to let it go like that. Because then I can just focus on the process every day. And when I'm loving it and I know I love it, the results, I put a ceiling on it. That's my perspective.
No, and that's a great perspective to have. Absolutely. So, thank you for participating in this first segment of the 20 questions interview.
I
So,
loved
now,
it,
if it's
man.
okay with you, man, let's go ahead and jump over to the next step where we get to take a look at your charts and we get to get on to more technical analysis to definitely learn so much about your system that we just talked about here.
Let's do it.
All right, sweet. Welcome back. So we've jumped over now to the live trading room. We are here with Austin, where we are going to just go through some analysis and one of his trading sessions so you can get an idea of the method behind the madness. So Austin, welcome back.
Thanks, Marcus. Appreciate you.
All right. So what do we have here? Just looking quickly at the screen, what kind of chart are we looking at? What system are you using?
Sure. So my system, basically what I'm going to show you guys today is I look for three specific patterns that I've back tested and that I have the data that tells me if I take these three strategies in some variation, if I only take these trades, more often than not, they're going to be winning trades and they're going to be winners that go over 2-to-1. So that's really what I'm looking for. Now, I have a checklist of questions that I ask myself that helps me narrow down which setups are worth more than others, which ones are higher probability than others. And that helps me decide whether I should be in the trades or not. So I figured today we could kind of go through some of my ideas from this morning and also touch on some of the lessons already. I like to pull lessons out of each day. So yesterday was Monday. I have a lesson already from the week that I think is important and that a lot of people can find value in. But to your question about what we're looking at here, basically, I know it looks like a lot of colored lines, but it's very, very simple. So these first 5 colored lines under my candles, those are just EMAs. And I can pull it up so you guys can see. I have an 8 EMA in yellow, a 21 EMA in red, a 50 in blue, like a light blue, a 200 in white, and then the 800 EMA in dark blue. So those are my like indicators of trend. They help me find my bias for price action. And then what I'm using down here on the bottom is a TDI. Now it's like a modified TDI. It's called a Trader's Dynamic Index. A lot of people use a TDI with volatility bands. I just didn't find them necessary. So we took them away, redid the back testing, and it actually helped. Just because I think that was a point in my career where I realized like you can do too much. You can have too many indicators. It can get like overbearing if you have too many questions. So we kind of modified the TDI and it proved to be successful. And that's what we're using now. And what that is down here is just a green RSI, a red and yellow moving average applied to that RSI value. So basically what you're looking at is EMAs that are pulling their data from price action. That's how they paint. And you're looking at an RSI with 2 moving averages that gathers a lot of its information from volume. So why I use both of these together is because if we can confirm what price action is saying with these EMAs, with what volume is saying, with the TDI, with market sentiment and trend, then we have 2 different data sources proving to us the direction of trend. So we have a really strong bias. And then I just go to look for my trigger signal, one of those 3 entries I mentioned before. And that's the way that I trade on a very simplistic level. Does that kind of answer your question on what we're looking at here?
It
EMAs
does
and the
indeed
TDI.
answer the question, and it kind of brings up an original question. So I don't trade forex per
Sure.
se,
Sure.
but one of the things that I heard, which could be incorrect, and I'm happy that I got you here, is like with forex, it's kind of harder to determine how much volume is being conducted on any given currency pair.
It's
But I
so it is, man.
mhm.
It's just different. It's not hard. It's different, right? Because everybody's used to either valuing their trades in dollars and cents or like in yeah, I mean, even options and futures, it's normally quoted in dollars and cents, isn't it?
Yep.
Right. So here we're not actually looking at dollars and cents. So this value you see on the right side, this
Hmm.
1.79851, that's the exchange rate between the 2 currency pairs. So right now we're looking at GBP AUD, so the Great Britain pound versus the Australian dollar. So this exchange rate fluctuates, and we're able to take advantage of these movements of that exchange rate. And I think it's such a powerful market to be in. And we don't need to go too deep into this, but these currency exchange rates move based on strong fundamental events in a lot of ways, like interest rate events, FOMC statements, things like that. So those fundamental drivers can create really strong and long lasting trends in some of these currency pairs. And you can come in. I mean, I could show you really quickly. If you look at, let's just say GBP JPY, this is
Hmm.
another GBP pair. Just look at the daily chart. So these are now daily bars. Look at the strong uptrend from when we broke out past 142. This is back in January. I mean, almost every day it moved up. Now that's a 7.3% move from, like I said, the beginning of February, basically till now. So
Hmm.
what is that? 56 days, about 60 days. So 2 months. That's a 7% in a currency pair in 2 months is a lot of movement, but that strong trend can create buying opportunities on almost all of those days. So you can keep that trend and just look for your trigger signals. You're not going to find them every day, but if you follow that bias more often than not, I think it's easier to be right in your trades just because you're trading in trend. You know what I mean?
Yeah.
So back to GBP AUD really quick. What we're looking at here, that 1.7965, that price, you can call it a price, even though it's not dollars and cents. This number is quoted in pips. So the way that I like to explain it to people, I wish I had actually I can do this for you. Watch. So we'll make this really big. So like right now we have one price is 1.79658. That 5 right here, the second digit from the right, that would be your ones place when you're counting pips. So if this 65, you see how that's the 2 digits right here? If that 65 was to change to 68, we went up 3 pips. If the 65 was to change to 75, we went up 10 pips. You see how we moved 1 digit to the left? So it moves just like any other number, but instead of saying dollars and cents, you're using pips or points, some people like to call it. So does that kind of answer what you were saying about the way that the pairs move? It's different than like a stock?
Absolutely. Yes.
Yeah. So that's how we're calculating movement. And really, it's as much as the pips are important, what I'm always focused on is risk reward, right? Like call it 10 pizzas, call it 10 apples. Like I don't care what the name is. If I'm risking 10, can I get 20? If I can't get 20, I don't even really want to look at this. So let's talk about this trade here this morning that I'm looking at. I think this pair is going to move higher today. We had a really strong move up overnight. But one thing that's important here and why I'm actually not in this trade yet is because this number, 122.92, where you have this green horizontal line on the top and this green horizontal line on the bottom, those are called average daily range markers. And it's a really important indicator to me because it helps me determine how much movement a pair should move on an average day. Some days, of course, are going to be above average. Some days, of course, are going to be below average. But when we're looking at reading risk reward, as we are here with a potential setup, I never want to expect to try to, or forecast, I should say, oh, this is going to break ADR today. It's going to be an above average day. That would be, I think, a little bit more aggressive. Wouldn't you agree? Like that, you're kind of like trying to forecast. So I'm using that ADR line to say, hey, if I was to take a position here and my risk was going to be 17.7 pips, that's what this number is right here at the bottom in the red. If we're risking 17, how much reward would it be to that ADR max out level where it should move on an average day? Today, that's telling me there's 44 pips to that level, which is about 2.5 R. So it's good risk reward in this setup here that we're looking at for this to move back to that ADR level that it touched this morning. Does that make sense? I hope that's not too
It does make sense. And so having those sorts of indicators on your word, being able to quickly calculate your risk reward, is that something that you had custom done? Is that something that is a part of what you're doing here?
Yeah, so it's not a custom, like this is just a measurement tool on TradingView.
Yeah.
This black line here that I have is just
Yep.
1R. Like I marked that off. See if you were to pull this down, this is my 1R level. See how that 1.0. So that's your risk reward. So for me, I've always felt like it goes back to the back testing, right? So this entry that we're looking at, as you see in my text here, it's a D1. This is one of those 3 signals that I mentioned. And in the back testing that we did when we went to prove if the D1 was a profitable strategy or not, the idea here was that if we have a setup, for example, like this, where ADR has already been touched, we can look to trade back to that ADR level if there is good risk reward. Let's say, for example, ADR was a lot lower. Let's just say it was down here and we could only get 1.5 R to that ADR level. It would be a trade that you could say, yeah, this could move and it could bust out and go way higher. But when we're trying to be consistent, and I think for me, when I'm trying to be consistent and stay with high probability trades, a setup like today is much more in my favor, something that I would much rather be involved in, where we have 2.5 R. Does that make sense?
Yes.
So the reason that I'm not in this trade, I want to just circle back to that too. It is a D1 trade. So we know that this is something that could set up, and I'll show you on the 1 minute even how I read the risk reward here, like where I determined the stop loss to be. But there's a couple of factors here that are important that like I use when I go down my checklist to say, is this a great A setup? Like this is nothing wrong with this. We should put the whole boat here. Not really, but you know what I mean? This is the best trade that we're going to find. Or is this not that high of a probability? What's wrong with this is what I like to say. So the first thing that stands out to me, we'll blow up the TDI here. So right in the middle of the TDI, there's a dotted line going horizontal. Can you see that, Marcus? That's the 50 value of the RSI. So you have your 50 value and it goes all the way up into the 90s and then all the way down below 20, right? That 50 value, we call it the 50. A lot of what I do, I've changed and given slang to these EMAs and this TDI because it gives it language. But with new language, you can like really open yourself up to all new opportunities. So one of the things that we did in our back testing was we paid close attention to this yellow line. Now that's not the RSI, that's an EMA applied to the closed value of the RSI. We call it the market sentiment line. And it's really telling you if the pair, in my opinion, wants to move higher or lower. But where you run into issues is when you have a swapping sentiment line, swapping from the under 50 value, which we call the sell zone, to the above 50 value. So if you look, you see that 50 right here in the bottom right, that's our 50. You see how at the start of the day with this vertical line, that dotted line, see how the yellow line is below the 50, but then it rises above the 50? That right there, automatically, when I go down my checklist, I have to give it, yes, this is a swapping liquid 50. Compared to, right, because we always want to look at what could be better, compared to, look at Euro AUD yesterday and today, look at the TDI here on the bottom, don't look at price action, look at how the TDI has been in the buy zone from above that 50 value all the way from the start of the week yesterday, even overnight, it held above the 50. Do you see that? So this is a setup. I was watching this, and we'll talk about this in a minute. I was watching this yesterday for longs, and then look what it did overnight. It moved higher because of, I think, that market sentiment line. That yellow line is honestly like the most powerful thing for me, because when I find perfect ones where they're not swapping, like this is in the buy zone all day, if you're looking to buy that and you find a trigger signal because sentiment is in your favor, I know more often than not, you're going to win that trade as long as your stop is placed appropriately. So I want to set up back to GA like this. As soon as I see this swapping TDI, instantly I'm like, okay, this could be a choppy trade. It could definitely move higher since it's in the buy zone more than it's in the sell zone today, but it could be choppy. Does all that make sense?
Yes, it does.
Not too complicated. I hope I'm not like going too deep into everything.
No, you are ultimately going deep in areas where I get some confusion. I try my best to ultimately ask the questions because,
Sure.
and it's great because I'm not familiar with trading currency pairs and doing Forex. So yeah, so it's great. I'll definitely ask the questions where I can.
Please throw them at me. My other thought to just give to everybody, because I'm sure some of the guys watching this from your channel are not in Forex like I am, like yourself. With Forex, it's so different than stocks. And the reason why I'm a big believer in indicators for Forex mainly comes down to the fact that Forex doesn't gap nearly as much as stocks do. Stocks are all over the place day to day. And it's actually interesting too. This is a total sidebar, but stocks have the pre and post market hours where volume is different, movement is different. There's even people, I'm sure you've heard of this, the people who buy at the close and then they sell at the open, and they actually end up beating the market overall, right? Because they're trading in so the stock market is so different where price is all over the place, pre-market, post-market, during the market. Volume drives that different. And those gaps make it super hard for technical indicators like EMAs and a TDI to gather solid information. You know what I mean? Like if price is all over the place, how could you expect a smooth line to give you super accurate levels? You just can't. But when price is really consistent, and that's part of the reason why I use black candles, is because you can just read them, because price normally opens right next to the previous candle. You just don't have those gaps. That tells me that these indicators can gather very solid information, which is why they normally work as really consistent levels. So that's why I'm a big believer in indicators here. When I do my stock trading, which is more like investing, because I look to like hold trades for a long time, I don't use indicators at all. I'm looking at price. I'm looking at fundamentals. And like, I'm sure you are, you're looking at all these other things, current value, PE ratios, just different pieces of analysis. So in Forex, technical analysis, I think triumphs everything else, because you can avoid a lot of the high impact news events that shake up the market and make people think Forex is super volatile. You can avoid them. You literally can go to news websites like this where it's free. You can look at the news today and see, okay, today at 12 o'clock, Chairman Powell is speaking. That red folder right there tells me markets could shake up and we know that happens while Powell is speaking. But if you were to look ahead to maybe tomorrow here at 4:30 in the morning, you have this Euro high impact news. We could see the Euro pairs get volatile. So when you're in a trade going into a news event like that, I always tell people, just get out, take the profit, lock the stop loss, move on, and then just reset, because we're just looking for day trades, So that whole tangent right there, sorry, I know I can rant, but that whole tangent is to just explain why I'm a big believer in these indicators, and why I think for some of the guys that are not in Forex, they're looking at this like, bro, get these colored lines off your screen. It's like, I understand that you want to just look at price, but these indicators give you very solid levels to trade off of when you're looking at a trending market, especially this light blue line, this 50 EMA. It's my favorite level to trade off of. It's just in any market, a 50 EMA is going to be a solid level of support. I just think, like I said, Forex, no gaps, that level is very, very solid. So back to my checklist here, that's swapping TDI, that's swapping liquid 50, that yellow market sentiment line. That's the first thing that I would knock against the trade and say, okay, this can't be an A setup because it's already a swapping. So that's one knock. Knocks are like bad things. That's what we call them. The second thing is that it's really, really overbought. You see from like midnight till about 3:30, the RSI value broke above 70. Above 70 is what we consider overbought. That's very overbought. Now, overbought doesn't mean that it's going to come down. Overbought can just mean where it's going to slow down to then move higher. So it's never a reversal sign. I'm not trying to sell this clearly. I'm trying to buy this today. I think it's moving higher, but you still have to take that overbought into consideration. Because again, the way I like to trade is what could be better? Well, this could be better if it wasn't overbought. Simple. You know what I mean? So right there, that's the second knock. And then the third knock, and this is where we can get like super basic. If I take off all these EMAs and we just keep it simple, 8 and 21, yellow and red EMAs. Those are short-term EMAs. If I'm looking to buy something, I would like to see the 8 EMA above the 21 EMA. We call that an upshift, like you see overnight where the yellow is above the red. See, and you get that strong move up. So when I'm looking to go long, if you look in here on price action, where my idea is, you see how the yellow, the 8 is below the red 21. So it's in a downshift. So instead of it being in the upshift, where we would then hopefully see the move on, what you're seeing here is us trying to trade it into that upshift. So that's just another small knock that could be better. What could be better is it could already be in the upshift when I'm getting this pullback entry. Does that make sense?
Absolutely.
So those three knocks that you see here, that on my checklist instantly puts it into the bucket of a C setup. So while I can come on here and I can explain all that to you, and I hope people are following me a little bit here, but I can explain all this to you. I can show you risk reward, but because it's graded as C setup, I'm not in the trade because I know C setups are choppier. They're lower probability. It might move 1R and then come down and stop. It's just lower probability trades. So I try my best to avoid C setups. I wait for the A's, I wait for the B's, and I hit those trades as best I can.
Absolutely. And that was one of the big things that I'm noticing from our conversation is just how much patience is built into your analysis, where more often than not, you're looking for reasons not to get into a trade versus looking for reasons to get into a trade. So for you, where did you begin to develop that patience? Like, do you remember a time in which that switch split for you?
I don't think it's a specific time. It's definitely taking losses in my first 2 or 3 years of trading and not understanding what I was doing wrong. And then what I ended up doing was really studying more. Like I have you see the bookshelf behind me? I have 2 more shelves over there with books. I just started reading books by like Mark Minaveri. I read Jesse Livermore's book. I read all of Steve Burns' books. I read SMB's books, Mike Bellafiore's books, Steenbarger's books. I read as much as I could to understand what successful traders were already doing. And all of them were saying the money is made in waiting and just hitting good setups. But because of social media, I honestly blame it all on Instagram and Facebook. And because of everybody getting into trading and showing pictures of them taking all these trades and all this fake Photoshop, whether it's real demo, doesn't matter. Just people showing the wrong idea of trading. I was like sucked into that for a long time. And then I actually do remember a moment. Chat with Traders. There was a podcast with a guy who said, do less, do it better, do it bigger, or some variation of that. And I took and I made that our saying at ASFX. I was like, that's what we want to do with our trading. Trade less, trade the best setups, and trade them bigger. Get bigger in those best trades. So I think, and a lot of it is really, I got to give credit to Mike Bellafiore's book, One Good Trade, because that made me confident in my idea, while everybody else on social media was like trading just regular support and resistance, which is clearly not what I do. They're doing Fibonacci's and all this other stuff. I was like, no, if I can just find one good system that does work, I back tested, I prove it profitable. Look at what Mike is saying. You can build a whole business off of that. And that's kind of what I followed, was just that model, you know? I'm grateful for that in the trading business. I'm sure you are. Like in this industry, we have so many smart people willing to share their experience, good and bad. You don't have to reinvent the wheel to be a successful trader. You really don't.
Absolutely not. And as you say, and as you remember, it just takes one good setup for you to be able to expertly be able to recognize it and just do it on a consistent basis. And of course, you're not going to win every single trade, but there's no holy grail that's going to help you to win every single trade. But if your probability is better than 50% minus the fees, you're still going to be able to have a profitable setup each and every time. So just thinking, one of the big things that I push forth with individuals in trading is to, as best as you can, think in systems. So you're not going to win every trade, but over the next 10 trades, over the next 20 trades, over the next 50 trades, are you profitable overall? that makes the biggest sense. And are you not putting on so much risk on any individual trade that you find yourself getting in trouble if you lose one? You know what
But
I
it's
mean?
crazy. No, you're so spot on, but it's so hard for, I remember when I got into trading like 5, 6 years ago, and I work with a lot of new traders. Like, it's so hard for people to understand that idea of like, you might lose this trade and lose money here, but in the next 9, you're going to win. But if you over leverage and your greed and your fear step in and you take too big of a position on that one trade can dig you into a hole that takes you way more to get out of. And that's just like, I think the statistic is if you lose like 40% of your account, which a lot of new traders do, you're probably blown out. You got to refund it and bring it back, because you're not making that back if you've already lost that much for most people. So I feel like a lot of it is short-term outcomes or what people look for, but trading is a long-term play. It's a long-term, like, in my opinion, it's like a long-term wealth building tool. That's what I see it as. It's a piece in the puzzle. It is not the end all be all. Any trader, I feel like, and you can attest to this too, I'm sure, because you know some pretty heavy hitters, they're not just trading at this point. They're diversified in multiple markets. Some are longer term investments. Some of them are in real estate now. Some of them are in crypto. You know what I mean? It's a tool.
Yeah.
So you have to get out of this mindset of like, I have to trade every trade to make money. No, you don't. You have to be humble and realize not every trade you see is going to be a winner. Not every trade idea you have is going to be a winner. You need to just accept. I think there's like these laws in the trading universe that if you can't, it's literally like the market will just beat the crap out of you until you quit, you know?
Absolutely. It's done its fair share of beating me up as well until I was able to ultimately go and get the message. So that's important.
That's
And what
it.
you say about being able to diversify is also incredibly important for a number of reasons. The big reason being that it takes the pressure off of you having to feel like that you need to take trades or that you need to perform well with every single trade that you do, which a lot of times helps you to perform better. The more pressure you put on yourself in this trading environment, the more opportunities you're going to have to make mistakes in execution. And mistakes in execution are usually the biggest ways that you're going to end
Right.
up losing money.
Do you think that that's a product of the people who get into trading? Like, the reason why we see traders do well under pressure is because the people that are going to do well in trading ultimately are those type of people that do well under pressure? Like, do you think they go together like that?
So for me, what I found, and this is for me coaching, hundreds, if not thousands of people on the emotional side of trading, it's those that are able to divorce the emotion from any individual outcome of a trade are the ones that usually do the best. The
Yeah.
ones that try to put any sort of weight on any individual trade are usually the ones that end up performing the least. And doctors are usually the worst performing people when it comes to trading because they are most times they have an alpha personality and they have been successful at everything that they've done pretty much up until the point to them getting to trading. But trading does not care how successful you've been at anything else because
Yeah.
it doesn't use your analysis when it's changing prices or when it's
Right.
moving things
Right.
around.
Right.
So all of the analysis that you are putting into an individual trade means nothing to the market itself because
No.
the market it's not making moves based on your analysis. It's
No.
making moves to satisfy the buy orders and the sell orders that are ultimately in the market. So what a lot of the traders who struggle don't understand is no matter what charting system you're using, no matter what analysis you have, no matter what person you follow, mentor, guru, or whatever, you are still operating with incomplete information. So
Yeah.
you could have the best analysis on information that's incomplete. So you feel that this is the correct thing that I should be doing, but you don't see the other 80% of the information that's telling you that that's a bad idea. And when
Right.
that occurs and you lose money, you believe that there's something wrong with you
Right.
as opposed to
Exactly.
there's an issue just with the information that you have available to you. So that's
Right.
why it's so important for you to be able to divorce your emotions from the individual outcome because it may not even be completely your fault with the information that you have available to you. So to answer your question, yes, I get a lot of people who come to me very upset because they're struggling with trading and they've been successful in life at everything else. But
Yeah.
once we get them around that corner of, listen, you're not going to be right all the time. In this game, the best of the best people are right 6 out of 10, 7 out of 10 times. If
Right.
you are okay with that average, then you'll be fine. But if you think that you're going to get every trade right, or if you believe that you're going to get yourself in a situation where you can take one trade, 2 trades, 3 trades, and now you pay for whatever it is that you're trying to pay for, whatever goal it is that you have, then we have to work on your mentality because
Right.
that's what's going to fix the issues going forward.
I love that. Yeah, I think it's interesting too that doctors don't perform well in trading, but it does make sense. You know what I mean? I feel like the people that perform best in trading, at least that I've found, a lot of like athletes, because they don't mind take like athletes are used to
Exactly.
going down 1-0, 2-0, down 14 nothing. And they're not, that's not a game over. It's not a game over.
Hmm.
Just like with a loss, and you know what I'm saying? You lose, especially if you're controlling your risk. Like a big thing for me was I went in when I got into trading, I thought like every trade deserved the same percentage risk, which is what a lot of people do. And I've found for me, what's worked better over time is not doing it that way. Like I've been explaining, these C setups, if I do take them, they're getting less than 1% risk, where some of the A or B setups might get a little bit more than that because they're
Hmm.
higher probability trades. So, and I think you have to look at trading like that. Not every trade is the same. It's a big thing. You know what I mean? Not every risk reward setup is the same probabilities. So it's a whole, it's a lot of moving parts with trading. And that's maybe another reason why doctors are not that good at it. They're just one thing focused. How do I cut this guy's spleen open and not let him die? All right, let's do that. You know what I'm saying?
Exactly.
So
Exactly. Because a lot of times doctors, they are paid to control the environment
right,
completely. You know what I mean?
right.
Like you have to
Yeah.
be in control because if you don't, literally people die. So
Die.
they use that same sort of mentality and they push it forward with what it is that they're doing inside of actual trading itself. And you can't do that because no one's gonna die if you get this wrong, my guy.
Exactly.
So just relax a little bit for sure.
I want to show you something really quick just because we did talk about this a little bit. This is Euro
Mm-hmm.
AUD. So this is yesterday. Back here is Friday. So what I have boxed off going across the screen is Friday's high. The way that I like
Mm-hmm.
to draw my zones is just using pins. And I use this 2 candle rule where if the two candles to the left, 2 candles to the right are not higher, then that to me is a resistance zone. Now, the reason I do that, and we don't need to go too deep into this, is just because I think there's zones everywhere. There's just so many support and resistance sensitivity zones, whatever you want to call them. That's why I don't rely on them for trading signals. But when we see clear levels like this, I tend to step in and use my 2 candle rule at a high of day or at a low of day, high of week, low of week, just because I'm not going to be ignorant to that level, right?
Mm-hmm.
On top of that, when I come in yesterday morning, you see now, since you guys, if you're listening all the way through this video, you guys know I love this TDI in the buy zone. That's telling me to look for longs. I love these EMAs here because they're also telling me to look for longs. The main issue with this trade, and this is something that we didn't discuss with that previous setup, is it doesn't check the box for one of the questions that I asked myself, which is this pair out of the Asian range? So Forex has technically 4 trading sessions every day, right? The US session, the New York session, the London session, the Tokyo session, and the Australian session. I've grouped together the Australian and Tokyo, Japan sessions just because I don't think it's necessary to have different ones when they're only an hour or two different. And to me, you
Mm-hmm.
have 24 hours in a day. What's 24 divided by 3? 8. 8 sessions, 3 8-hour sessions, you get your full day. You know what I'm saying? It's a lot easier. So what I'm looking at here, I'll turn these lines up so you guys can see them. I have built into this indicator. We had a guy in our group code this for us. Is the Asian session high and low? Now that's the black line right here and the black line right
Mm-hmm.
here. So it's marking the pin high and pin low. So when I wake up in the morning, I like longs as we're kind of coming off the 50 EMA, kind of holding above the 21. You see the yellow 8 is above the 21. So we're showing an uptrend there, basically. I'm looking to see this just break out. But the issue, again, is that we're in that Asian high, in that Asian range. What I like to see before I take a trade is I like to see at least one body close above or below the Asian high, just to show me that it's got potential to move today. It's got to show me that we've got something, basically. Because what I've found, even with good TDIs, if you are not out of the Asian session by the time that, I wake up, which is 4 or 5 o'clock New York time. So we're going London session into New York session. If you haven't
Mm-hmm.
broken out of the Asian range yet, the back testing tells us that it might stay trapped in the Asian session all day. And now here's why that gets interesting. You also can look back to Friday's high and see that level confirmed. So not only do we have Friday's high as the start of that top area of resistance, but now it's our Asia high showing resistance here before I was awake, 4:45, 5 o'clock, showing resistance. So I'm not going to jump in long right under that resistance level since we bounced off it twice already since Friday. Make sense so far?
Mm-hmm.
So as much as I wanted to buy this yesterday and I wanted to get long and just hold it and say tomorrow it's going to be higher, I know that based on the TDI, my thought was no trigger signal. And this is where, again, my patience really does come to shine and show off because I'm like, I can read this bias and we can see I have tons of examples, like I'm sure you do, of missed trades where look at this move higher overnight that I could have been in, right? But you have to just separate from that. You can't catch every move. I'm not greedy like that anymore, like I used to be. So without the trigger signal here yesterday, I'm watching it. No entry. 10 a.m. comes. I'm off the check. I'm off the desk. Done for the day. I always stop my Forex trading at 10 a.m. It's just when we see pairs normally slow down is afternoon of the New York session, less volatility, less trading volume, so less potential for moves. So that's why I start to step off around then. But then overnight, you can see massive move to the upside. It actually maxed out ADR during the Asian session. So the point of this whole thing here is, number one, I look at this and I'm like, okay, I know very well that I can normally read the bias that these pairs are moving, especially with a good TDI and good EMAs. I'm normally right on my bias, but I can't catch every move, and I'm not going to be able to get all of every move. So even if I was to look back on this, and I'm going to later today to do my testing and my markups, I could look at this and say, maybe there's an Asian session opportunity for a breakout there. There's other trading opportunities that can come from it. So instead of looking at it like, oh, I missed this, I look back at it and say, well, what could I get next time? Is there another opportunity? Maybe I come back and look in the Asian session. And the last point that I want to make on it is, notice it was in the Asian session yesterday. Overnight, it makes most of its move so far last night in the Asian session. You can see since the Asian session, it's been kind of sideways. This pair, Euro AUD, it's an Australian dollar. So in that sense, it's probably going to make most of its moves either in the Australian session, the Asian session here, or in the New York or in the London session, because it's a Euro pair. New York, as we head into the end of the New York session in the next few hours, it's probably not going to move as much. So that's my whole thought on this trade. And I feel like I have just so many opportunities like this where I can read the bias, but I don't get my signal. And it motivates me because it tells me there's more opportunity. You know what I'm saying? Like I can even look on a higher time frame, come to a 1 hour chart. Some of the guys in our group chat last night ended up buying this and trading it up towards the 800 EMA right here as it broke out past Monday's high. So you can see it breaks, retests, comes off to 21. And with a good TDI in the buy zone above that 50 value, that would tell them that it should move up to this blue line here, which is the 800 EMA. And that's exactly what it did. So that worked out to be a nice little 100 pip trade, 154 to 155 for them. It's a nice little move in the day. So that's my thoughts on this trade.
Gotcha. Okay, so that brings up a couple of different things. Let me ask the first question first because it's more relevant to the chart that we're looking at. So let's say someone does enter in that Asian session into the long, okay? Yep. So they know that it may end up going to that level in which you described before. But then what would be your process for, let's say, setting a stop? Would you trail that stop up as it continues to go, or like how do you handle that?
Great question. So let's talk about the placement of the stop first. It's actually really simple. For this entry that we could be looking at here, we look for breakouts. They're called A1 entries. That's what the name of we gave it. The pullback entry is what we're looking at over here on the other pair we've been watching, GBP AUD off the 50. This isn't a breakout because we already have our high of day sets. So this is, like I said here, the D1. So D1s are in trend like an A1, but they're at a pullback point like a 50 EMA versus this A1, which we're looking for a breakout here. So with breakout formations, if you get confirmation, and I teach all this in the courses, so I don't want to go into it too much in the video, but if you get confirmation on the TDI, because that's really where this is determined, because you can find these candle formations everywhere, right? Like we can find, once you understand what I look for, they're just engulfing formations. They're everywhere. So they have to be the certain type of formation, a certain engulfing candle confirmed with a TDI that's in proper value to then be considered an A1 entry. Does that make sense? So it's not just the candle formation. So if this one here does look valid with the RSI in the position that it's in. The back testing tells us the stop goes at the entry candle open price, and you add a little bit for your spread, depending on the pair, 1 or 2 pips. It's normally not much. So in this situation, coming off the red 21 EMA, the stop would be about 14 pips, 14.1, right under that entry candle open price. And with these formations, the next candle, the next 15-minute bar should be moving in the direction that you're trading. So in this situation, it should stay bullish. And if it does, then we're looking for it to hold the 8 EMA, the yellow line, 15 minute by 15 minute. And the way that I'm managing that stop loss goes back to the grade of the trade. So let's just say, for example, this was a B setup. With my B setups at 1.5 R, close to 2 R, I'm going to take about 30% of the trade off in profit, and I'm going to move my stop loss up to cover the trade. So I booked some profit. My stop is now in profit. So I can't lose any money on the trade. And then I'm watching it candle by candle. Now, let's say it was a C setup. I would take profit at a greater degree. So instead of 30%, I'll take 50% and I'll take it sooner. So instead of it 1.5 R or 2 R, On a C setup, I'm taking 50% at 1R and I'm locking the stop because a C setup could be choppy and I'm not going to risk losing money after being up in a C setup. Now, that has led me, and everyone will ask this, that has definitely led me to leaving money on the table. But it's also just kept me surviving. I'm not taking as many losses as a lot of people do because of that. I'm also not catching the whole move. But I'm a skinny guy, man. I don't need the whole move. I just need a couple ribs. I don't need the whole rack. That's my analogy in my head. You know what I'm saying? So yeah, I could definitely be getting more of these moves, but I'm more about the just bag, get the risk off the table, put some in, let's come back and do it again. Cause I know they're just going to keep showing up. If you look back at my back testing from 2015, same candle formations are there. Same stuff is still there. It's going to be there in 2023. What am I rushing for? Why am I trying to get all this move? Let me just bag and just stay alive. And that's, I think, why I'm starting to build such a following on social media, is literally just because I've survived longer than most people. You know what I mean? A lot of people just burn out. So that's where the stop comes into play. And then that's how I'm moving the stop as the trade moves in my favor. Now, on an exit side of things, if the trade was to break the 8 EMA, that's like the first sign trend is ending, but I normally won't pull the trade there. Instead, what I'll do is move the stop up closer to mitigating that risk once it starts to turn down. But I'm trying to exit my trades in, I'm either trying to piece myself out, like I would be closing at R multiples and then getting stopped in profit, or I'm going to really have a clear risk reward level and I'm just going to take profit and get taken out. That's my goal. Most of my trades, though, which I think is different than a lot of people, is I'm getting stopped in profit on a small piece of it at the end because I'm just piecing it out as it goes, following the trend. And then when it does come back down, my stop is higher or lower if I'm selling it, whatever. And then it takes me out and I just go on to the next trade. So I've embodied the Tom Basso approach. He always says, I don't know if you follow Tom, he always says, enjoy the ride, enjoy the ride, enjoy the ride. So I kind of took that as like, he's moving stops, he's riding an 8 EMA, he's riding a trend, whatever his trend is, I don't know. But that's what I'm doing. So I'm embodying that idea, enjoying this trend until it's telling me it's done. Why would I want to say when it's done? Like you said, we don't know future market direction. I don't know if this could go 30R. Why would I get out of the trade right now? You know what I'm saying? Hold a piece of it. And then, of course, piece yourself out of it because you hate popcorn trades. And that killed me at first, where it pops up 3R, you don't take any profit, and then it comes down and stops you out. It's like, are you serious? You know what I mean? So popcorn trades are the devil. So I just mitigate risk, bag profits. Someone's going to make more money than me. Someone's going to make more money than you, Marcus. Someone's going to make more money than everybody watching this video. It is a part of the business. You can't try to be the best, get it all. Like I said, humility has helped me a lot. You know what I mean? Especially me with a big ego. Humility has really shown me just so much value in my trading. And the market rewards that, bro. Like, I know I sound a little crazy maybe when I say the market rewards things like that, but I do believe that. Like, when I'm super patient and I'm feeling that I'm doing well in being patient, I'm not forcing bad trades. I'm waiting for Thursday, Wednesday, a great trade will show up and I'll smack it, pull 4 or 5R out of it. And it's like, oh, that's the universe in the trading universe saying, here, bro, good job being patient. Take this. This is easy for you. Those are the trades that I love to be in, rather than being here sweating, watching my other screen. Like, where's my position? Am I okay? You know what I mean? So.
Yeah. And that's important. One of the things that I hear from your explanation here is a couple of important things that I want to pull out. The first is that there is a confidence that you have in your system that allows you to believe in general that there will be another setup in the future.
Love that.
I believe that a big reason why individuals try to take so much of a move when they get in one is their lack of confidence that they'll be able to either identify or take advantage of the next one that comes up.
Everybody needs to rewind what Marcus just said and listen to that 3 times. That is so well said, bro. So well said.
Yeah, it's so just seeing that is something that, one, lets me know, one, you know what you're doing, but then 2, that more people need to understand that there will always be another trade. And if you can have confidence in your ability to be able to identify when the next trade comes up, then you're okay with being able to take whatever the profit that you have when it actually becomes available to you. So if you do get stopped out, that's okay. You get stopped out, there will be another trade, but at least you were able to be in the money, make some green, and then be able to look for the next one.
And learn something. You can learn something from all of these trades, winners and losers. Part of the reason I started documenting all of my trades and sharing it was because it helped me hold myself accountable to documenting. Like, a big thing at first for me was I would take 3 trades in a day. 2 of them would be on the system that I was trying to prove profitable, the A1 or whatever it would be. And then the 3rd trade would be some random bullshit. I would lose it. And I would be like, oh, don't worry about that. That was just a test. I was just testing that out. Don't hold myself accountable. And I'd run from those trades. But then starting to share more on YouTube, showing my P&L, showing those things, it like made me confront that issue. And one other thing I wanted to say based on what you said, because it was just so well said. The confidence, I feel like, is always being balanced with fear. And you have to just slightly make sure that confidence outweighs the fear. And the way that I've always done that, because fear creeps in on us in trading in every way, man. Like in every sense, it's going to try to come out. So what I've always done is back testing. Like even last night, we had family here last weekend. Monday night, they're flying out at 5:00. I come home at 6:30 and I hit the chart. So I'm like religious with my gym, just like I'm always in the sauna and I'm always at the gym for my fitness. I'm very religious about this gym, doing my chart markups, forward testing the strategies that I'm trading, seeing if I missed entries that day, seeing if I could have done better that day. And that, I think, makes me more confident than more fearful when I show up to the market, because I've done the work already. I know it's going to probably be there. It's just a matter of when, you know?
Yeah. And for those people that, and I mean, you run into these folks all the time that don't truly see the value yet in being able to go back and look at your past performance. I always use this analogy. You think LeBron James doesn't go back and look at his previous games? Do you think Steph Curry doesn't go back and look at his previous games?
I got a great one for you. Phillip Rivers was the quarterback for the Chargers. They moved the team 2 hours to Vegas, right? Or they moved the San Diego team. I'm pretty sure they're now based out of Vegas. The point of the story, excuse my lack of football knowledge, but the point of the story was, this was on Twitter and I saw it. He had a custom van built, so he didn't have to move his family 2 hours to wherever they moved it, LA, or they moved it to wherever. He didn't want to miss out on that time of like footage and of study. So he built this big ass Escalade with a big 60-inch TV in the back. And he sits there with his driver every day, 2 hours each way. And he's studying film in the back of the car. So it's like he could be doing so many other things with that time, but what does he choose to do? Like one of the best quarterbacks of the last 15 years. What is he doing? Watching film. Still 4 hours a day watching film. Like, come on. You know what I mean? It's like, and especially with trading, to me, not to go off on the motivational stuff, but it's like, if you want the audacity to work from home and control your time, control really the direction that your life is going to go, don't you think it deserves a little bit of accountability, a little bit of journaling, a little bit of work? It's a business. You know what I'm saying? But some people are just going to come in, click buttons, walk away, get frustrated. Come in, click buttons, walk away, get frustrated, close the laptop. They're blowing their accounts and they're done. And they're like, trading's a scam. It's fake. It doesn't work. No, like, you don't know how to run a business. You're not taking it seriously. You're not doing the things that the successful people are showing us to do. You're just not willing to put the work in. And that's the facts of all of it, man. Like, trading is not for everybody. That's what it comes down to. You know what I mean? As much as everybody wants to make money, because we have to in society, trading is not going to be the answer for everybody. And just back to your other point about like the doctors and all the other people, think about it like with any other business. I look at these losses. There was a story a couple of years ago. There was like a Porsche import on its way over from Europe on a container ship. The container ship crashes. Bro, like all these exotic cars go piling into the ocean, to the bottom of the ocean. Do you think Porsche is like, oh, close up shop, close the laptop, we're not selling cars anymore? No, you just take the loss, man. Like, it's like, what are we going to do? Shut down? No, we're going to figure out how to just make that money back this year. What do we need to do? Learn. And what do we need? Do we need a new shipping company? Do we need, like, you don't bail on the business when you take a loss. You don't go making crazy emotional decisions when you just take one little loss. You know what I mean?
Agreed. Yeah.
100%. Let me give you a couple more things here, just as we're kind of wrapping up, as we're getting closer, because it's been quick, man. We're already 9:45.
Yeah. Look at that.
Well, stocks are open now, all red across the board on my side of things. Just at the stocks that I'm looking at, SPY is down 0.14 right now. I like to watch stocks just because I think you do see a little bit of like a volume come into play around this time, 9:30, even 8:30. Sometimes you do see some volume injections sometimes to the Forex pairs, never religiously. It's never like, oh, 8:30's in, Euro USD's. It's never like that, but it's just interesting to see how the volume kicks in. One thing that I've been doing a lot of analysis on, just to kind of feel it out. I don't know how much you look at the dollar index, but I've been watching it just to see if it can create euro trades for me, because if the dollar index moves higher, it's an inverse of Euro USD. Euro USD will come down. So I've been watching the dollar index since we saw it break 90. This is like, back a couple of months ago, but it's made a strong move higher as we've been like coming out of the coronavirus cloud, so to speak. Vaccines are rolling out, right? And that, I think, is what's leading the dollar to bounce. But what's interesting is that it hasn't created as many ideas for me on euro pairs in recent weeks compared to the run up to the election, where after Biden won, we saw the dollar index fall for a steady, like about 2.5 months. That led to a decent amount of Euro USD long opportunities here in that November, December, January period. So it's interesting. You see this kind of pullback happening on the daily bars here, where it's not a ton of movement, not clear where it's trying to go yet. Do you have any opinion on where you think the dollar's headed next? Are you a Peter Schiff guy? Do you think it's going sub 90, or are you going to hope that America stays afloat?
I'm always going to bet on America because this is
Yeah, me
where
too.
this is where I was born and raised. This is where I will stay.
Yeah.
Yeah, so I'm never going to go against. I'm never as an investor though. I'm going to make sure that I make the correct trade no matter what happens.
Yeah.
But in my heart, I'm not going against America. No
Yeah,
way.
it's hard to. So that's why hopefully we can see. I think if you see the dollar index break back above 92.5, back towards 93, it's going to be hard to see it coming crashing back down, especially as the economy comes back. So that's kind of creating my future ideas, for some euro pairs. Like if we do see the dollar index rise, I'm going to continue to look for euro USD to move lower. So that's kind of my thoughts on, like, I don't do a ton of forecasting, but I like to give people like my analysis on what I'm looking for just in market movement in general. I think one of the other most fascinating things you like right now is oil and what oil can do to Canadian dollar pairs. You're normally going to see them work together. Ask me why, couldn't even tell you. But over time, we found that there's a correlation between Canadian dollar and oil. I'm sure people have their reasons, and there's a bunch of reasons, but that's important to watch as well. Oil has been an interesting trade, right? I mean, considering where we saw it. I mean, here on this chart, it's down at 1588 at its lowest point during last April. It's pretty impressive to see it back up at 72 at its high,
For sure.
Cool. Let me pull this back up.
Okay, so if I can, because we
got
do
any
have
questions
just
for me?
about 10 or so minutes left. So
Yeah.
the first question that I want to ask is based on your chart here. So I'm noticing the lack of red and green candles. Now I have an assumption of why I think that may be, but I would very much like for you to explain why
What do you
your
think?
candles seem to be a solid color.
Come
Well,
on, tell me what you think.
so for me, on an emotional level, the idea of having red and green candles ties to both your own profit and loss. So if you're looking at that instinctively, you're going to have these sorts of ideas behind why it is. So you're able to be a bit more neutral in terms of these are just prices going up and down. Two, also, you're not dealing with prices per se in a stock price or something like that. Like you're doing currency pairs. So the idea of it going up and down and those sorts of candles aren't as relevant as they would be if you were looking at a stock or let's say necessarily a futures price. But for me, I was thinking more on the psychological level. Why would you put yourself in a situation where you are giving yourself these triggers that things are going to constantly be going up and down if you can keep it as neutral as you can get it? But I could be incorrect in that assumption.
You are spot on, my friend. And one other thing to add on to it, and I can explain it too, like when I turn the colors on, even I'm now nauseated at my chart. I know a lot of people will see my chart with the black candles and they're going to be like, bro, that's a lot of colored lines. Now with more colors on it, there's just so much that you're seeing. You know what I mean? So the black candles, like you said, definitely help take away some of that emotion because you don't want to see green candle. Oh, I should have been long. Green candle. Oh, I should have been longer. And we know that can lead to that FOMO and that chasing a trade, So what I've done is we'll flip it to black candles. Let's just even leave the bullish candles as black for now, because what you'll see is if I zoom in on this, you can read, if you understand how to read a candle, whether it's black or red, because these candles are not gapping like a stock would, you can just read it. Like, when a candle, like as this candle is red here, because this next candle opens here and closes here, if I was to make that black, that it's a bearish candle. And like you said, it isn't so much because price is not quoted in dollars and cents, but just defer it back to the idea that it's technically based. I'm looking for structure. I'm looking for breakouts or pullback points in an overall trend. So what I'm seeing there isn't so much, it's not, the momentum in that moment isn't as much of a factor. I'd rather just get a good price. And the black candles, I think, help me stay focused on where's the price, where's the stop, what's the risk reward here. You know what I'm saying? Absolutely. So it's one thing that makes me unique for sure, because I feel like you don't see that too often,
Yeah. Now, for me, my candles, at least for the last like 3 or so years, have divorced from being red and green, and they're more.
Oh, really?
Yeah, more neutral colors. I may go, just all white, but then like one is solid, one is clear, things like that. So I don't necessarily go with the whole color scheme that much anymore. Or because I'm from Georgetown, I changed mine to blue and gray. You know what I mean?
Sure.
Just so I can,
so like
I can keep
like
my
this.
chart customized. Yep.
Yeah, exactly.
Yep.
So
but
same
just
kind
to
of thing.
divorce,
Yeah, even that helps, just because then you are taking the emotion, I think, out of it. Nobody wants to be long and then like looking for a long, and then see 5 green candles when they come back to the chart after walking away. They're going to be a little emotional in a lot of situations, especially newer guys. So it just helps. And then once you do it, I feel like it's just been a habit. And even when I look at stocks, because again, just the way that I look at stocks, this is one of my biggest holdings. It is my biggest holding right now, SPCE. When I'm looking at this, I'm really looking at price relative to maybe a few EMAs, but I'm trying to like zoom all the way back and look at structure. I'm not caring if this was a bullish or bearish so much that previous day, or you know what I mean? So that's just my perspective, because I'm doing longer term investing. Like I look at SPCE at 31 a share and I'm like, okay, do I think this is going to be 131 hopefully? Or is it going to go down to, you know what I mean? Yep. The previous 3 days of colors don't matter to me so much, you know?
Yes. Okay.
Yeah. So it's just
a second question that I have related to this is along the lines of alerts. So with this system that you use, or with any system that you're using, do you hold the idea of like, okay, well, you know that if it hits a certain level, here is not where I will take a trade, but where I'm going to be hyper focused on making sure that I know that this is where I may go? Do you get text alerts? Do you get audible alerts? Like if you're away from your computer, away from your trading desk, and it does hit that level, do you have any sort of way to know that? Or is it a situation where when you come back to your trading desk, oh, it's, you know, that I missed that opportunity, I missed that trade?
I think, can you hear me still, Marcus?
Yes.
Is the audio okay? Because I think it switched my microphone for a second.
Yeah, it does sound like your microphone switched.
Let me switch it back really quick. 1 second.
Sure.
Microphone. Cool. Any better now? Check.
Yes.
Better? Back to normal?
Yep.
Can you hear me okay? Cool.
Yes, I can hear you.
That sounds good. Sorry. So for the alerts, I don't use any on my day trading, just because the way that I have conditioned myself currently to day trade is I want to be in front of the desk when I'm looking to take trades, and I want to be able to manage them, like I was explaining before, as they move. Now, where I will set alerts is after the day trading session. So let's say, for example, we took GA long and it moves up 4 or 5R. My stop loss is locked. I've got 30% of the position, 40% of the position still on. What I would then do, knowing the stop loss is locked, because I got to go on with my day. I've got calls. I got to go to the gym. I got other shit. So what I'll do is set an alert where I think I would like to close more, maybe at 6R, 7R, so I can get dinged to look at the phone then. Or I'll set an alert if it's coming down closer to the stop loss, so I can just pop on my phone, make sure my stop is in, double check it, something like that. But even that, as you can hear in my voice, I'm not too big on the alerts, just because when I'm here, I'm trading, I'm focused. And then when I'm done, I need to get a break, because then I'm going to come back hard the next day. And that's just the way that I do it.
Yeah, that is truly important.
And just to touch on, just so we can, since we're coming to the end, I know, look at GBP AUD. So what this does now is it starts to come down and hit that stop loss level that I had set in this idea. It proves to me that avoiding C setups is typically a good idea, because this is what they do. Watch this come down to this 200 EMA, 800 EMA area, 179.30, and probably make another move higher. So this is what I'll see very often is you'll get a C setup idea here. It might come back and stop you out, but then still make that move in the direction of overall trend, overall bias. And that's why, for me, I've lost so much money trading setups like this. And then I get so frustrated when it comes down and then it moves up at the end of the day and I missed it. You know what I'm saying? So it's just been better for me to be able to grade them, be able to identify the lower probability ones, and just say pass for now, you know?
Absolutely. And that kind of leads me to kind of one of my final questions here, which is, if you could kind of take us through, and you kind of touched on it a little bit in the beginning, but like take us through what your routine is, or what you do routinely when you wake up in the morning to go ahead and get ready to go set up, you know, and trade. So is there a certain number of things that you do, certain number of things that you look at? Like, how do you get yourself in the mode to be ready to trade and crush it?
First thing, I wake up, got to get the coffee in. And then once I set my coffee machine to make the coffee, I actually do 10 minutes of meditation every morning. I think that's made a big difference in my patience too. Like just the slowing down, because I am a guy, I don't wake up in bed where I'm all cozy and I love bed and I know, like I wake up and I'm up. I don't know how you are, but it's like I didn't even sleep sometimes. Like my eyes are up, I'm ready to go. So, and that's my brain, loving what I do and just being passionate and having that energy. I got to balance that out. So in the morning, the meditation has been a big thing before I come to the desk. It's what's honestly kept me out of setups like this. Meditation and avoiding C setups happened at the same time for me. So that would be the first thing I do. And then I come in and you see the watch list here on the right side of my screen. I have about 20 currency pairs that I'm looking at. The reason I'm focused on these currency pairs, specifically Euro and GBP pairs, as you can see, is only because they have the most volume. I want to be in pairs that are being traded the most, so I don't get, if you trade pairs with lower volatility, currency pairs with lower volume, and If you trade currency pairs with lower volume, you'll see more volatility, bigger wicks is what I'm trying to say. And I don't want to trade anything with big, nasty wicks because that's just going to hit my stop and move in my direction and make me mad. So I focus on euro pairs. I focus on GBP pairs because they're where you're finding the most solid price action. And what I'll do is I'll literally start at the top of my list, especially at the beginning of the week. And I'm going to first always look at the TDI because going back to my analysis on the GBP AUD and everything, it's always going to be based on the TDI. If I can't confirm what I'm seeing here on price with this TDI, I cannot take an entry. So it makes sense to start with the TDI when we go to our analysis is the way that I do it. So when I find TDI that is in trend, that's not too oversold like this, then I'll start to mark them on my flag list here. I'll put a red flag on them if I like them for the day. And then I'll work through the checklist on each one of those flagged pairs to see which one is the highest probability. Today, I had GJ, GA, and GBP USD all flagged. And GA ended up being the one that I liked the most out of those three. And that was the one that I was focused on the most here. So that's kind of how I'll narrow it down. And it's normally just based on technical analysis. And then like today, for example, is Tuesday. If we go into Wednesday after like today, if GA ends up coming higher, tomorrow I'll come in and I'll still be long biased on it most likely. And I'll look to confirm that with the indicators. And if I can get my bias from the previous day's price action or previous day's trades to confirm what the indicators are telling me that day, boom, that's a nice combo too, because now we're carrying trend, and that's a high probability place to be, not to just take your trade, but to start looking for the entry signal and looking for it in that trend. So that's kind of how I'll carry the bias across multiple days. And on those days, I might not go through the whole watch list. I might be like, I'm focused on EA. I know I want to be buying EA. Even yesterday, what I said was this could shop in the Asian range like it did all day because we know it can. That's what the back testing tells us. And I said, maybe I'll come in tomorrow and look for longs. Come in today. We could look for longs, but it already maxed out ADR. It's already super overbought. We're getting towards my end of my trading session here. So we're done for the day. But that's how I'll come in and just look for that bias. I won't try to short the top of EA today. I'll stay with that bias. I'll stay with that trend. And then until it tells me to reverse, so to speak. You know what I mean? Until it tells me it's going the other way.
Yeah. Yeah. No, this is beautiful. This has been great stuff. It's been a great hour. And I can't believe it's gone as fast as it did, but that's just a sign of it being good conversation. So
I hope so. I hope everybody's finding value in it.
Indeed, Austin, I appreciate you so much for taking the time to answer our 20 questions interview, as well as to open up your actual trading setup to let folks ultimately see what's going on. Sure. So my final question for you, man, is kind of let us know what you got going. How can we check you out? Kind of what are the things that you have going next? Let the people know what you're up to.
So first, I appreciate you having me on, man. It's been a good conversation. I hope that I didn't rant your ear off too much. I appreciate you and the team having me be a part of what you guys are doing. I'm looking forward to watching your channel grow and watching you continue to have some heavy hitters on here. I'm excited for you. What's coming from us is, man, absolutely. Right now, it is March, almost April. I am just coming out of the live trading event that we did in Phoenix. We did one already this year in January. I've been doing these events. I was doing them before COVID, where we get people together in like a classroom setting and we do a full day of trading together and education behind our systems. And now that kind of COVID is coming out, we're starting to get back into it. So our next event is going to be in June in Miami. And I've sold about half the seats. I have about 7 people already that purchased. So I have 6 or 7 seats as of us filming this left available. So if anybody listening wants to learn more about Forex in a live setting, come to Miami in June. We'll be hanging out. It's going to be a good vibe. Hopefully all these people from all the craziness last weekend are gone, from all the spring breakers. I think they will be. And then it'll be a really good place to learn. And the cool thing about these live events, man, is like I've had guys that I've been trading with. They learned these systems with me and they've been with me for 3 years, some of them 4 years. They still come to these live events and then they get better. And it's like they were already making money doing pretty well for themselves. But then to see them, one of the guys, his name is Dennis, like change his entire plan and still do better. I'm like, it's incredible. And I think it is the connection that you can build with somebody deeper than this Zoom. Like if we were sitting in person right now, this would be so much more tangible. It's so hard to do this over computers. You know what I mean? So getting in front of somebody, you see the sweat coming off my face, you smell me. It's just super impactful. So I'd love to have everybody there. If you can make it, let me know.
That is great. And we will definitely make sure to put a link to the live event in the show notes so that anybody who's interested can definitely check it out. But here it is. It's been an hour. Austin, I appreciate you so much. This has been another episode of the Market Replay Live podcast. And I look forward to seeing everybody again next week. Thanks, Austin.
Thanks, Marcus.